Hello and welcome to Pro Trader Strategies Market Commentary for Monday, February the 25th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, though, we are here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on. Not really anything great for economic data. We did get final wholesale inventories coming in at 1.1%, expected to be 0.3%. Now remember, we would like to see inventories lower because that means they're moving product. If we can continually see them build like this, that would be on the expectation they're going to move this inventory, but there is no real major events in order to move a lot of inventory coming up, like a Christmas holiday, right? This is way too far in advance to start building inventory for Christmas. So not liking to see that. Those inventory costs hurt corporations because they cannot move that product, is what it's looking like right now. And we got a Fed governor speaking probably right about now. Later on this week, we do have some good economic data coming out, so that might be something to move this market. But as of right now, not a whole lot to see here. And we'll be moving on from the economic data. Let's look over there at the equities now. We've got, or equities and the markets overall. We've got crude oil coming off nicely today, especially if you're bearish. I've been talking about this. I think it's gotten overextended to the upside, up trying to test this 60 handle. I think that is way overdone. I think it's more valued closer to the mid to lower anyway. Crude oil, we're right there at the mid 50s. I'm looking at the like 52.50 kind of area is really where I see the value for this particular product right now, with the way that the economic picture looks and the demand for crude oil right now. All right, gold trying to make a bottom here after the last couple of days. We've seen a bit of a sell-off. We're trying to get a bit of a move higher. It's just not happening. I think it's overdone to the upside. A lot of people are gold bugs and are really clamoring that the economy is moving into a recession and this is the time to get into gold. I don't know that that's necessarily right. We are close. There's a couple of economic data points that are pointing towards recessionary numbers, but across the board globally, I don't think that we are that much of a risk of a recessionary move right now. It's not to say that a couple of months down the road that some of these numbers start really waning a little bit and leading us to more of a conclusion of a recessionary type scenario. I don't think that we are quite there yet. Therefore, I think that gold needs to come back off into the 12 handle anyway, 1200 handle. All right, we got the bonds moving a little bit lower. You know, with the Fed governors talking on Friday, a lot of them are talking that there is no more Fed moves to the upside anyway, and the next Fed move may very well have to be a lowering of interest rates. At least a couple of them said that. That being said, bonds need to come off a little bit, but I don't think that interest rates are going to go higher or lower, at least for 2019. So bonds, have been trying to price in lower interest rates. I think it's going to be priced in pretty close to where we are right now. VIX, trying to move a little bit higher today. We've got a mixed bag in the equities, at least for the better part of the day. Let's take a look at them. We've got the Dow Jones Industrial Average up quite nicely, up almost 200 points. You can see that little gap. That's because the Dow Jones Index here doesn't take into account overnight trading. So with the rest of the equities moving higher, this is where we open up. That causes a little bit of that gap move. That will eventually look to get covered, but I don't know that it's going to be in the next day or two for that matter. But we got the Dow Jones up about 200 points. We look over at the NASDAQ composite, almost unabated to the upside off the open, as you can see here with the NASDAQ up about 70 points. Again, we've gotten above that 200-day moving average in the NASDAQ and that support of the Fibonacci extension. All of those things being said are really propelling or allowing the NASDAQ to propel to the upside. We see the NASDAQ up 40. Now we have the E-mini S&Ps here up about 20 and pushing up against this 50 Fibonacci extension, and it coincides with the value area high. Both of those two lines in the sand will act as a major resistance. As soon as we start hitting those value area highs, that's where the market is getting away from perceived value, whether it's to the upside or the downside. And that's where you start seeing the levers and pulleys of markets happening, because the people that bought it where they found value are now going to look to try and cover that and start to see maybe a bit of a rollover happening back down to the point of control. Big move today would be to settle above the value area high in this 50 Fibonacci extension for the E-mini S&Ps. Now we look at the breakdown. These are 30-minute candles. Each candle is a 30-minute. Each blue area here is a day session. As you can see, overnight, as soon as we opened, we basically gapped a little bit higher. Didn't really make an attempt to cover that overnight. And today's session, no attempt to really flush out those longs from the overnight and even from Friday, to be quite honest. So that is a pretty bullish sign when you don't have the day session really try and flush out those weak hands from the overnight session. So pretty interesting move here today. A settlement above this 50 Fibonacci extension would be a major coup for the bulls. All right, let's look at some trades that I've done. Dow Deere is something that looked a little bit of toppy. You know, we've gotten up to these levels a couple of times before with the overall equity or economic picture not being great. That could indicate that, you know, that Deere is a little bit overdone to the upside. So therefore, I'm looking for it to start to come back down. I played it with some long puts. You can see implied volatility percent is really low. We don't have any earnings coming up, and if they do, they're way out here in and around where I'm going to be buying my options, right? That's when we buy in that low implied volatility environment around those earnings, and hope that when the earnings come around, we start getting that inflated volatility, which helps out this position, even if I'm directionally wrong. So with that being said, in the Deere trade, I went in and sold or bought some puts because, like I said, we have really low implied volatility percent. We're looking for volatility to expand. Therefore, that's when we're looking for a premium buying strategy for all those scenarios. Directional assumption to the downside, volatility extremely low, expectations of volatility moving higher. All of those fit in line with my rules for setting up this strategy. So I went into the Deere and did the May and bought the 160 puts in there for $5.20. Did it pretty small in correlation to what I usually do with the buying premium strategies versus selling premium. So about half of a tranche for premium buying is what I usually do for versus what my selling is. All right. And so looking for this to play to the downside, like I said, I'm buying those 160 puts. So I don't have a whole lot of downward movement to really start gaining some traction on this one. Basically a move down to this a Fibonacci area. That would really put me at a point where I am at that profit target, which is about a 50% increase in my premium. So that's what I'm going to be looking for in Deere. And then Home Depot is the trade I'm going to be looking at for earnings. It's really one of the few ones that have earnings. I'm probably playing Home Depot to the upside. But at the end of the day, I'm going to make that a game time decision. But as of right now, with the very little research I've done, I'm going to be looking to play this on the upside for Home Depot. And that's the only real earnings I've seen, other than there's Apple, but it's Apple Hospitality. So we're not going to be playing that one. So Home Depot seems to fit the bill the best. And so check it out on Twitter at Wolfman's blog. I'll be tweeting out what I do in Home Depot or any other earnings trades later on, because I haven't decided as of right now, so I can't tell you. All right, go to ProTraderStrategies.com. Also sign up for the webinar that I'm going to be doing on Thursday. It's going to be great. We're also going to be starting a newer series where I kind of go through what I do in the mornings as my daily ritual in order to get ready for the day and set up some of my trades, whether I'm getting in or out. All right. So check that out also coming up. That's all I got for you. If you can't take that, take it easy.